Hello and welcome back to another video. For those of you who don't know me, my name's Jared, and today we're going to be discussing the overall market and kind of what's going on this last week and why it's important to pay attention to things and not freak out. So we're going to get right into the video and take a look at the market. It's down today. Pretty much every rally that we just had has pretty much been given back. You had this stuff going on with the Strait and Iran, and we thought there was going to be peace, and then missiles are being launched again. So you got a little bit of a stain on the market there. I just have my stock portfolio showed up or pulled up right now. I just wanted to point out some of the stocks, just like CRM, Salesforce, the SaaS companies. They all had a massive rally and then they pretty much gave it all back. Um, Same thing with most of these stocks. SoFi's in that same kind of category. We're right back down, working our way back down towards those 52-week lows. Most of these stocks are actually struggling right now, but that's why I wanted to discuss the market as a whole. You want to be diversified first and foremost. So when stocks like this, AMD down almost $50 today, that's almost 10% in a single day. Granted, it's had plenty of $30 to $40 up days too. So that's why we talk about diversification. So when you get to those highs, you start pulling some profits, you spread that money out amongst other stocks that have high potential in different sectors or whatever it may be, and it kind of minimizes your losses while at the same time um, you're capitalizing on it because you're still pulling your profit, and then you're still staying in the stock if it's a company that you perceive that is going to do very well further to come. And then these days don't feel so bad. As you can see, my portfolio total today is down a little over 5%, a little over $5,500. It was upwards of 6 to 7, and we're kind of fluctuating right in that range. But I just want to point out some of the companies that I've been calling out as a buy. You got Plug Power, you got Big Bear AI, SMCI, all of my quantum computing companies. Since I called them out, they surged 70-80%. I pulled very little profit. I thought they were going to go higher. I warned everybody that when they rally hard and they fall hard, just as hard, if not harder. In which case, we're pretty much right back down to my buy in points. Now, does that mean I'm going to continue buying them? Absolutely. That's where this is the market that is going to make or break investors of this year. And the reason why I say that is we're back into zones where you can pick up stocks for dirt cheap. Amazon barely down today. Celsius is my only positive so far today. It was a much longer list, but as the day goes on, prices fluctuate. Once again, Elf under $50. You got Fubo under $10. Service Now back to 113, down 5% itself. SoFi back down under $16. These are great opportunities to be picking up these stocks. And yeah, I still have a couple that I still have quite a bit of profit in, and I'm just on a hold. I'm not going to sell when we're down 7-8%. I would like to pull my profits when I'm back on the way up. Is that going to happen? Not necessarily. And that's why you gotta have your risk to reward figured out. I talk about it all the time on this channel. You got to monitor your own risk because you are going to have days where you're down 5, 10, $15,000. And if you go back into the market and start trying to sell off and pull what you can, then that's going to hurt your portfolio in the long run. So I'm just making this video to tell you guys that it's okay. The market is not going to zero. You're fine. just hold on. I understand it's Friday, but you got a lot of things coming through right now that are directly affecting the market and causing so much fear that people are just massively selling off these stocks. Now, do I wish I would have sold some of the SaaS stocks at the beginning of the week, Monday, Tuesday, when it was at, a major rally up? Absolutely. But we can play the what if games all day. You're never gonna be able to beat what if I would have guessed the right numbers on the lottery. You're just not gonna be able to win with that kind of mindset. So we got to roll with the punches. We take the losses and we capitalize on the gains. And let's go into, now that I've showed my portfolio again, um, a couple other reasons that are directly affecting the market is that we actually reported way above, over double what the economists expected for the month of May in the um, unemployment and jobs report. So most of us would think, oh, that's a good thing, right? Well, the reason why it affects the market is there's not a whole lot that affects the market that's good unless it's going to be a rate cut or huge announcements that, Palantir landed a multi-billion-dollar contract again. That affects Palantir, but that also affects the defense stocks as a whole. This is one of the things that gets tracked pretty heavily. The reason being is it directly reflects what happens when they go into the Fed rate decisions. So a higher than expected jobs report may show the Fed that, oh, everything's moving fine. We don't need a rate cut. Actually, inflation's still kind of, it's not lowering as quick as we wanted. So maybe we do a rate increase. And that's exactly what the market's pricing in today, which, you know, it affects it, but it gets priced in early. So the reason why I'm saying that is if we're pricing in right now a possible rate hike or a stay the same instead of a rate cut like everybody wants, all of us investor wants, then that means we're pricing it in already. So you buy at these priced in points, meaning on these massive sell-offs. And that what that's going to do for you is that when the Fed rate decision actually happens and it's not what everybody wanted, but it's already what we expected, you're not going to have this massive fear and this massive sell-off again. More than likely, because we price things in early. So you're kind of trying to read the market for the future. And as of right now is a great time to be buying. Don't take all of your money and invest it into random stocks that are the furthest ones down. That doesn't mean that they're solid companies. You still got to do your research into what makes a good company and what makes it a wise investment for yourself. But right now is a great time to be picking up some of these companies at a awesome valuation because of this massive sell-off. Are we going to be back up positive next week? I hope so. I'm not going to promise anything because the market can continue going down, but guess what? That means I'm also going to continue buying. That's the kicker is you buy on the lows and you try to sell on the highs. You're never going to get it 100% right. So you got to just remember what your risk to reward situation is and what your tolerance is. With all of that being said, another fuel to the fire is the Broadcom futures. Broadcom, from my understanding, I'm not invested into Broadcom. It was a little bit rich for my blood. And it sounds like that they set up their earnings, they did everything right. The problem is they held firm on their future forecast of what their earnings were going to be, their revenue. And everybody was hoping for a massive increase because if you watch or you follow along with my videos, I've spoke about it previously. that all this capex spending is happening and nobody really knows for sure where it's going and what it's going to draw it back in profit or revenue. And that's going to be a problem because when some of these companies are growing massively, they have the revenue coming in, but they're not showing the growth that's going to equal out to what the CapEx spending was from these other Mag 7 companies and massive companies. That's going to cause people to be fearful. They're going to be looking at that it is actually an AI bubble and they're going to have massive sell offs. What they're not realizing, and this is 100% my opinion, is that by correcting it now, if it were to be a bubble, you're prolonging the popping of said bubble. I don't believe we're in a bubble because they have the revenue to back it. If they didn't have the revenue and the growth that is currently happening, then absolutely I could agree that it's a bubble. But when a company is reporting 80% growth in their revenue from the previous year, that's very difficult to say that their price shouldn't be higher. We're pricing in the future growth too. Even if it grows 70% the next year, that's still a huge increase in growth and revenue. And I just feel that a lot of people aren't really thinking about the long term effects of what all this means. Broadcom's not the only player on the board. There's so many other companies that are viable competition, and it's kind of causing these companies to sell off. I already showed you AMD, their $50 wipeout today almost. And does that mean AMD's back in a buying position? It definitely helps. It doesn't hurt for us to reevaluate AMD if it continues going down. And once again, it's risk to reward. If it's going to be $1,000 stock, would you rather buy it at 550 or would you rather buy it at 450? Most everybody's going to say 450. There's an extra $100 per share to be made in that scenario. And that's what we just got to wrap our minds around, that it's not a good time for you to be selling off at these losses trying to protect yourself. Now, another aspect to the market that I don't think enough people talk about, and you hear about it, people getting liquidated. So when you put too much and you build in too much risk into your portfolio, so you start pulling on margin, you start leveraging your shares and your assets, and the stock price goes down so far, then whichever investment holder or app or website that you're utilizing, the exchange, they're going to start selling off your assets to make their money. They aren't going to loan you the money for free for you to just lose it all because you had one good investment one time and then you moved on. Now, if you're investing with other people's money, that's a little bit of a different story. But they can always come back at you and say, hey, you didn't uphold your end of the deal. So once stocks start going down, you have multiple people getting stop lossed out. That's fine. I love stop losses. I use them to protect my gains. So AMD, if you would have had, I think yesterday it went up to like 530, something like that. If you would have set a stop loss at 500, you would have locked in almost $30 worth of profit. Do I think AMD is going to come back higher and stronger? Absolutely. So I'm not trying to take a shot at AMD investors at all. I have AMD still. And I've made a bunch of money with AMD, so I'm more than happy with what I got going on. But you protect those losses or you protect your profit, actually. And so people start getting stop lossed out and then they start getting liquidated because they decided to go into margin or leverage when things were on a massive uptrend, just like the beginning of this week. People think that CRM and now weren't going to stop. They were just going to keep going to the moon. They were going to hit their all-time highs again. All that. I saw the videos. I saw the TikToks. I saw the YouTube shorts all over the place that they were going, and everybody was so happy that they bought in on these stocks. And now we're right back to where they were before the rally. So anybody who decided that I was going to margin in on the uptrend or leverage in on the uptrend, they are now going to start getting liquidated, which is a very scary thing. So before you do any kind of trading when it comes to that, please make sure you're doing your research and you fully understand it before you actually go in and do it. All of that being said, I know that I just ramble, and that was a long explanation for probably not a ton of information that you haven't heard before. Be watching your stocks, especially today in the down cycles, in the downtrends, and reevaluate and see those companies that were a hold, they may be back to buy. The companies that were previously a buy may be dead money. We don't know until you do your research and you actually look in on them. You know, now I'm back to over $1,000 negative in my CRM um, stock, the amount of shares that I have. It just is what it is. Do I believe CRM is going to continue going higher? Absolutely. I think they're going to hit all-time highs within the next year or two, which is going to be when I start pulling some of my profit. I think they're going to do great things, but right now they're back into buying territory, even though I said I was done because I owned over 5% of my portfolio was in CRM. Well, they're right back into the running because they're dropping back down. At one point they were 9 to 10% when they were up, and now I can see myself buying additional CRM in the near future. Maybe not today. I bought some other shares. I bought some Big Bear AI and a couple other companies today. But all of that being said, make sure you're doing your research, stay safe in the market, make wise decisions, make a plan, and stick to it. If you made it this far in the video and you liked the content, smash the like button, share it with a friend, and stick around until the next video.